Hello traders, hello everyone. Welcome to our new webinar. It's Monday, October 7th, so let me know if everything works fine, please. Hamido is here, that Pip is here, Enes is here like always, so it looks like that we are ready to go. Just waiting for final confirmation. Hey team, how are you? Okay. We are all good. So before we start, let me just remind you that we have this special offer going on. Get the 2 months for the price of one. So this one will be for limited time only. So if you will find value in our analysis and you want more frequent updates on a daily basis, make sure to check our website and offers here. Okay. Now what's going on? Well, as you know, we have seen a very strong rebound on the dollar last week. Fed may look obviously for less cuts than firstly expected, and non-farm payrolls report on Friday also came out strong, so another indication why dollar could stay in a recovery mode. Keep in mind that crude oil, okay, which I have it here on this chart, crude oil has been bottoming at the start of September. So for most of September, we have seen a pretty nice, in the second part, we have seen a pretty nice recovery. And we know that crude oil is probably the most important when it comes to inflation expectations and calculations. So now when we'll get the number from the US CPI for September, maybe we'll come out around expectations, which is 2.3. down from 2.5, or if there will be a miss and we get numbers around 2.5 or even higher, because crude oil is bottoming, then obviously this means that the dollar could see much more upside. Okay, so keep in mind that these figures, which will be released, I believe, on Thursday, will be very important. Okay, and maybe the Fed would really have to make a step back, because keep in mind that you have an easing cycle going on, and then you will have this inflation data with the strong non-farm payrolls report on Friday, and obviously these cycles will change, and it means that US yields could move much higher. So here in blue, obviously that's the inflation rate on a yearly basis, and obviously you can see that it's tracking these crude oil prices very nicely, and crude oil is currently higher here, so that's why I would not be surprised that inflation will be sticky at the current levels, or possibly even it will turn up. Okay, because expectations are 2.3, so now you have a 2.5, the latest reading, and obviously it won't be an easy task to see inflation coming back towards 2% when you have strong, quite good economy, I would say, and you have the easing cycle going on. So crude oil, keep an eye on the crude oil. I know that sometimes, or in the past, correlation with dollar was negative, but now when inflation is still some kind of a main issue here, especially because non-farm payrolls report are fine, then of course this data should be tracked very closely, because it will help us to navigate the dollar going forward. Now here, since I discussed about the dollar, what's going on, keep in mind that dollar came sharply to the upside, exactly as we predicted out of this ending diagonal. I firstly thought that 102 will be very strong resistance, but keep in mind that now we have only one leg from that lows, so it means that there is plenty of room for this recovery, possibly even for the 61.8%. I'm not really sure if that will be a free wave rise, could be something else, but that doesn't it's not really important at this stage, because we have a clear trends that are in play for the last few weeks. So I think that these trends could actually resume after a pullback and then up into the third leg, and then let's see what happens here around the 104 area. But I certainly think that there is room for more upside, maybe even some opportunities on the long side here, especially after the retracements. Now if we take a look here on on the daily chart, I still think that there is a chance that actually dollar will come to the downside. But as I said, firstly, we are going back maybe towards 104. And in the meantime, as I said, maybe some pullbacks here first. So 104, as I said, is strong resistance, can be even resistance for a wave 2. But if this strong resistance area would be taken out, then I'm afraid that we are going to retest these highs before we eventually will turn significantly to the downside. So these 104 levels will be very, very important in the next, let's say in the next few weeks, to see if really will decide to see if dollar is really back in bearish, still in bearish mode, or maybe it's sideways, or potentially even will test higher prices. But don't get confused by this some kind of a rallies that you see. Okay, these are still just a temporary recovery that we are currently observing and tracking. And yes, we understand that there can be more upside, of course, especially as I said, if the US CPI will come out strong. But don't get confused with the higher degree trend. Okay, the higher degree trend still shows very nice impulsive drop from that October 2022 highs. Okay, now you have a counter trend movement going on. So sooner or later, downtrend will resume, but maybe now it's just more like a tricky time, especially when you have these elections coming out, and in the US president elections, and also you have this inflation data that maybe will have to give us more clue what is going on and what should Fed do going forward. Now, if we take a look on US yields, this one should be also very important, okay? So US yields are currently on the rise. We see quite nice and strong move to the upside. We are currently at 4%. I said that this should be a very important resistance at 4%. So still, let's see what happens in the next few days. But again, if inflation will come out hot, you will see US yields moving much higher. And considering that central banks are in easing cycles, and of course, then Fed should be forced to stop cutting rates, okay? And maybe if there will be imposed, then you know what speculators will think that maybe even Fed will have to change back towards more hawkish approach, especially if inflation will start ticking higher, and this will send the US yields much higher. So this week, I think we will have some very interesting volatile price actions, but still we cannot say that we are back in uptrend unless we see here on US yields breaking 4.3%. So when we start breaking these levels, well, that will be the real confirmation that US yields are back on the rise. But for now, I just still think that maybe this support zone, very big one, is around 3.4, 3.2% for later this year. Okay, so we will see what kind of a price action we get in this week, but I certainly think that that's pretty nice and sharp rise. It still can be corrective, but if we'll see much more upside and strong close into Friday, then of course I may have to look for a completed wave C down here. Now let's take a look also on euro dollar. Now on maybe some higher time frame charts here on a daily, well, I'm tracking this counter trend movement. Maybe we will get back towards this triangle pivot, which is around 108.20 area, 109. It's also the 61.8%. So that would be my minimum downside objective, okay, for the current euro pullback. Okay, and then again, let's see what happens there. Keep in mind that that's, if you just try to hide this for a moment, well, that's still a range, okay, and we will basically be trading around 108 in the middle of this, what, 2-year range or so, and that's definitely not bearish yet. Okay, so we may only go back into the middle of this range, and then just again we'll try to move and stay sideways here. But when it comes to the Elliott wave principle and the power of the Elliott wave principle and the substructure is that even if we think that 108 can be very nice and strong support and we will see more upside going forward, well, keep in mind that this wave 2 should be made by 3 waves, minimum, A, B, and C. And because we have seen a very sharp drop last week, and it was a close, daily close, weekly close at the lows of the week, I just think that more weakness will be seen on the euro after rally. Okay, so after wave B, let's zoom this in a little bit. So after wave B, I would be expecting more weakness. So I even think that there can be opportunities on the short side, and the euro, as you know, has been quite weak recently, especially compared to some other currencies. So I'm looking for more weakness down into wave C whenever this wave B rally occurs. And then you have another wave count here, an alternate wave count, which even shows that there can be plenty of room for more weakness if we start breaking the supports around 108, which is also the channel or trend line of this upward channel. So I think that after the rally on this euro dollar pair, we could see more weakness. And as I said, of course, the US CPI will be very important, but I do not see inflation coming, let's say, around 2%, especially not with now when they are cutting rates and when we have crude oil showing completely different picture here. Okay, so euro dollar, I think that after a rally we could see more weakness, but then very big support around 108, maybe even slightly higher, from where we could see another push to the upside. Also, last week, as you know, cable, there were some comments from Bank of England members that they could be looking to cutting rates, and of course we have seen a very sharp drop here. Looks like that we are breaking this wedge trend line, trend line support of this wedge pattern, so more weakness clearly should be seen. Also watch the RSI here. So we have higher high here, okay, compared to this one, if you look at the price compared to this one from September 11th, but you have RSI very low here, lower than the previous swing. So I think that this shows us in which direction we are seeing very strong momentum. Okay, you see RSI trading much lower compared to the price, so it means that momentum is very strong to the downside, and this tells me that we are here in trading impulsively, and that obviously I would expect more weakness after a rally and bounce back in wave B. So very nice resistance, could be maybe first one. If I always try to focus also on some round figures, so 1.32 could be very nice resistance up to 1.33. That was also the area here from end of August. Maybe some near-term supports for to complete this wave A could be obviously around this wave 4 at 1.3, which is also very important psychological level as well. So in the next maybe few days, I would not be surprised if we start seeing some reversals higher for a wave B rally here. Now, if there are any two currencies that could potentially be more attractive than US dollar, then these are CAD and Mexican peso, and it could be obviously linked to because of a higher crude oil. And if we take a look here on dollar CAD, maybe daily chart, so we had a pretty nice sharp decline through this trend line support, and now we are retracing back. We retested the lows here, but not really broke through. We're just rallying back into this range. So I think the 38.2% and 50% are very important resistance levels. So watch out for potential new turn down from there, especially if again inflation will come out hot. Crude oil will maybe still be moving to the upside. Maybe geopolitical tensions will maybe even escalate even further on the Middle East, and this obviously could make CAD strong. With the same situation could be maybe with Mexican peso. Now Mexican peso, not sure if you are following this one closely, but on Friday when we got this data out, non-farm payroll support, and the US dollar moved sharply to the upside across the board, if you were watching those major pairs, actually at that time we have seen dollar Mexican peso actually making this drop here. So it tells you how Mexican peso is actually strong. So maybe it was not the best pair to look at dollar Mexican peso, but maybe euro versus Mexican peso. And I've been sharing also some analysis of those crosses in our chat room as well, and I have been looking for this break to the downside on the euro versus Mexican peso, and it was the very simple logic. Euro has been very weak. As you know, there are dovish expectations from the ECB, and on the other hand, you have stocks that were still doing quite well, which is bullish for Mexican peso, and also crude oil was rallying at the same time. So this kind of a relationship made the perfect example for and bearish case for euro versus Mexican peso here. Okay. Here we have also Kiwi. We have rate decision this week. Now the question is, will be there the 50 basis point or maybe only the 25 basis point cut? Inflation is coming close to 3% target, so definitely they're looking to cut rates, but it's all about the message, what will be the decision and speculations for next meetings. But definitely this appears like a very strong drop, so looks like that speculators believe that they are going to cut 50, and I think that more weakness will be seen, especially after we see some recovery here. That was a very nice and beautiful impulse down. So after some consolidation here, I just think that there can be room for more weakness, possibly even below these supports here around or towards 0.650. So watch out for Kiwi. Also also keep an eye on dollar yen. Now dollar yen is now at some very interesting first attractive resistance, but with rising US yields, unless this will change dramatically in the course of the week, and with Japan putting on hold potential further hikes, I just think that it's a bit tricky to trade dollar yen, but technical levels are there. Okay, and the wave structure is also very interesting. So you have these 5 waves down, and you have a counter trend movement. You have very nice first resistance in 149. I think that maybe even higher one can be much more attractive around 152. I certainly will wait and watch what will happen in that area. But if suddenly we see impulse down on smaller time frame, let's say beneath 145, and you see daily close price below that level, and you have an impulsive reaction on smaller time frames, meaning you will be able to count 5 waves down there, then this will be confirmation that most likely Japanese yen is going to strengthen down. Now the question is this because of a weak dollar or because something has changed in Japan? But overall, whenever this dollar yen is ready to turn to the downside, okay, that's when other yen crosses will most likely follow the same pattern. Okay, and I just think that sooner or later we will see a resumption of this decline and this drop that has been that has unfolded through summer. But of course, sometimes it may take time before the next third leg to the downside will occur, and there's still plenty of room and time actually for this wave B to correct and maybe even unfold as a more complex. But overall, I think that the direction is very clear here and the resistance very well identified. Now let's take a look also on on gold. Well, as you know, no matter what happens, gold is doing well. You have these geopolitical tensions, gold is doing well. You have strong non-farm payer support, gold is doing well. You have very strong US dollar, gold is doing well. And maybe we will get very strong inflation. Well, as you know, gold is known as an inflation hedge. Still, gold could do well even after some potential first spike to the downside in inflation. The US will come out hot. So I think that gold still has room for further gains here into this within this wave 5. So watch out for more upside. Also, looking at the 4-hour time frame, I still remain very patient here, and I think that 2600, 2620 is very nice potential support on this pullback. That's the area where wave 4 would be very similar in distance compared to wave 2, not only in price but maybe also in time. And also you have this 38.2% in that area, and also this trend line support. So this appears very attractive. But whenever I want to cut maybe a wave 4 here, if I want to look for entries with buy limits, then of course my stop losses and or invalidation would be beyond the 61.8%. Okay, because very rarely wave 4 will retrace for the 61.8%. It can for 50, but not for the 61.8%. If that happens, then here this, I mean, would not fit the wave count perfectly, right? Because wave 4 would be, in my opinion, too large. So that's why I would keep an eye on these levels down here. But overall, as I said, gold still, I mean, after the next after the next dip, I just think that this looks attractive. Unless we see obviously a break below 2532, then something is changing, and most likely we will start moving into this much higher consolidation phase, this wave 4 as illustrated in this basic simple chart here, or illustration, not chart. Okay, now the S&P 500, we're still here in a bull run. I think that there is room for more upside, but we could be losing some strength here, so possibly we will see some resistance, the major one by the end of the year, or maybe in 2025. I certainly think that we are in wave 5 of wave 3, so now maybe the first resistance to watch would be maybe already the trend line if we retest this the upper channel here, but then definitely the 6000 is a very big major level. If I don't know what, but something major happens here, and let's say that we start breaking 5600 supports, which is basically this trend line, then I would be looking for this wave 4 to be a flat correction. Okay, I like flats, especially on stocks, because you know that wave C on stocks, whenever the price drops, are very sharp, and that's when a lot of fear is involved, and not a lot of traders will be willing to buy because of the sentiment, right? Everyone thinks that they should buy cheap or when the price is low, but when the price is actually dropping, there are only a few that will be looking to enter the market. So that's what actually causes these very sharp reversals on the price chart. You see very strong decline when a lot of traders are seeing stock prices that are dropping, and they are forced to sell their shares, okay, because of fear. And usually when they are done with selling, the market will bottom. When some indicators or some other things becomes very, very bearish, that's when sentiment is ready to change. So usually this occurs in a flats formation quite nicely. And if we will try to analyze maybe some higher time frame charts on the S&P 500, you will be able to find those flats and identify them very well. So if suddenly, let's say that market comes and breaks, comes lower and breaks this trend line, I just think that there will be very, very good opportunities to join the trend after this very strong drop. When others would be out, we would be looking for potential stabilization here. Now let's take a look also on some of the single stocks. Here's Apple. I'm not really sure when it was the last time I checked this one, but so far it's looking quite good. I mean, after this very nice rebound in August, we are now consolidating. We are moving sideways here. We have some gap from 2 weeks back or so, around 220. So let's see if this one can be filled. Maybe a very nice support, but overall I just think that that's a consolidation that can take us higher. Maybe even if it's an ending diagonal, as you know, very dangerous. A reversal pattern, meaning top formation could be seen, but for now I think that there is room for more upside, maybe even towards 250 after this wave B will be finished. Now if we take a look on AMD, we've been tracking this one as well. We see prices higher in pre-session. Markets will open in around 5 minutes. So we are seeing prices coming back into this gap from July of this year that we've been tracking closely. But if we start pushing even higher and maybe see 190 or so, then most likely we are stepping into wave 3 rather than wave C. I also like the nvidia. As you know, we've been looking at nvidia recently and we have seen some nice pullback here, but it was a very small one, so I'm not really convinced that we're ready to break out just yet. If we suddenly see a drop towards 110, I think that that would be even better and much more attractive for potential turn to the upside, because we are looking here at an ABCDE triangle, and usually this triangle will complete itself at the lower side of this contracting range. So now it's a little bit maybe too fast to say that we are going to break out just yet. Unless we see a push above 131, then I think that straight to the upside, we are going straight to the upside then here. Let me check my list. Coca-Cola, also some very nice ongoing pullback. We've been covering this one 2-3 weeks back or so. We said that most likely we are just slowing down here, so 38.2% will be the ideal support, but keep in mind that that was a very nice and extended wave 3, even more than 161.8% of wave 1. So in such case, maybe you will not even see the 38.2%. Maybe these levels around here are going to be enough. So no matter how, I see this as a counter trend movement. You can already see 3 subwaves from the highs, so I think that there is still a chance for more upside on this stock. What we have here, Alibaba, obviously Hang Seng Index. I think that shares in China once again made a very nice move to the upside. So it's not a surprise that we see this price obviously will most likely gap higher here, and there's still a room for more gains. As you know, we should pass this out, this high from January of 2023, and then maybe who knows where we go. But definitely in the short term, even if we see some retracement, I would stick with this bullish view. There's one stock that is not looking that great, and that's Microsoft. I mean, here if you try to identify the trend is obviously up, right? But keep in mind that we broke through this trend line support, the channel, back in July. And then what happened? Well, we rallied only with 3 waves back into this same channel potential resistance line. And now we are threatening the lower trend line support, okay, of this potential wave B rally here. So I'm afraid that there is going to be a deeper that there are going to be deeper prices, even potential head and shoulders top formation here. Well, I don't really want to project the prices here, the potential breakdown, but that's definitely something that is not looking bullish at this stage. Okay, so just be aware that there can be more weakness here before potential stabilization on Microsoft. So if market suddenly turns into risk off, this one could be much lower. Someone is asking for German DAX. By the way, guys, if you didn't yet, please subscribe to our channel, press a like if you're watching this right now, and also if you're watching this recording later, make sure to leave us some feedback or comments in the video, in the comment section, please. Now Bitcoin. Okay, so what happened last week? Well, if you're seeing US dollar moving sharply to the upside, then of course Bitcoin will maybe have some issues to find and attract some buyers. And what actually happened is that Bitcoin moved here above 65,000 when maybe everyone expected, or not everyone, but a lot of the traders expected a major break to back to new all-time highs. Market does the opposite. And notice that actually we came very close to these waves C to A fib levels. Okay, so this was the key reversal zone up here in that area. And notice what happened. This even like a small impulse from that high. So I'm afraid that there can be more downside, especially if dollar will really stay in this recovery mode after setbacks. And plus we have some unfilled gap here on futures, and those gaps on futures very often were filled. Okay, you have one example here that goes back to August, okay, and we were filled and market pulled back. Even this one has seen some gap here at the end of August. It was filled and market reversed. So maybe we'll see, who knows, something very similar here. We could make something like that, and of course I would be looking this then to be a major support if we see this drop. So the question is, what is the major wave count? Well, always when something like this happens and some of my short-term fuse wave counts are invalidated, I will still look at the higher time frame charts, okay? And this did not change. Obviously we are still seeing a consolidation, but obviously it can take longer to unfold before we may really start breaking higher. But I just think that there is still a room for a push to a new high here into this fifth wave. Now if we try to speculate a bit, and let's say that maybe this gap will be filled at some point and this could be then a major support, then maybe the best approach is to look for a potential triangle still underway. So still plenty of time for this correction to be completed, unless I'm wrong, and let's say that we see prices breaking sharply to the upside and we see a weekly close out of this downward channel, then of course we should start looking straight to new highs. So I just think that sooner or later even Bitcoin will see a retest of the highs, but of course you have to be very patient here. With this kind of a price action, it's not always easy to call end of the correction, okay? So we will have to be very nimble here and keep a very close eye on some of the substructure to identify the right patterns. Okay, so someone asked for German DAX. It was Hasni. Okay, so German DAX, well, looking at this 4-hour time frame here, notice that rise to new high, okay, from that low from 17,000, looks like it's in 3 waves, right? So that's good, because obviously it seems that bullish trend is incomplete. So either that's part of an ongoing motive structure, because I'm looking for 5 waves up still ongoing, or maybe it will be, if we start breaking below 18,500, maybe will be part of a complex correction. But in the short term, I just still think that there is chance that this is actually a wave 4, and what I would be looking for potential supports is here around 18,900. Okay, that was a small gap here from end of September. We came quite close here, but notice that that was a very sharp fall. I think that that's possibly wave A of ongoing wave 4. So watch out for deeper correction. So after this bounce in the short term, I would be looking for more weakness, but then 18,900, maybe 100 points lower, that should be the major support. Okay. Someone asked someone asked for pound dollar. Well, we actually covered it at the start, so if you will be watching the recording later, you can check this. Okay, traders, actually that's it for today. If you're interested in more analysis, we have special offer going on. Get the 2 months for the price of 1, so check this out, or just simply keep an eye on these free charts, free blog posts, or follow us on Twitter, where we share a lot of useful information. So traders, good luck this week and talk to you soon. Bye.